following presentation was recorded live at Politics for Lunch on February 2nd, 2016. The topic is Idaho tax policy, and the speakers are Ken Roberts, Idaho Tax Commissioner, Senator Jeff Sidaway, Local Government and Taxation Chair, and Representative Gary Collins, the House Revenue and Taxation Committee Chair. The panel is moderated by Bruce Newcomb, former Idaho Speaker of the House.
Okay, so these three gentlemen that you're going to hear from that are going to come up here a little bit are really good friends of mine. We've been through the wars together, and Ken Roberts was a member of the House, and we have a lot of good stories together. After I left as Speaker, he became caucus chair. And we were talking about today that when I came into the House, I was really conservative. When Bob Geddes came into the House, he was really conservative. When John Tippett came in the House, he was real conservative. When Ken Roberts came in the House, he was real conservative. Now we're all bureaucrats. I don't know if that's a plus or a minus, but I have to say that Jeff and Gary probably have a future. But anyway, so Ken brings a lot of experience, legislative experience, along with being chair of the Tax Commission. And then Jeff Sidaway, I've known for a long time, and he's a fellow rancher. He raises sheep, I raise cattle, and he married well. His wife is one of the nicest people you'll ever meet, and she keeps Jeff on the straight and narrow, but he's got a wealth of experience. Of course, he's chair of the Local Government and Taxation Committee in the Senate. And I'd just like to point out, last year, he sent a message that there would be no tax decreases until there was funding for education, and he held fast to that. So this year you get a response out of the governor's office to try to help alleviate some of that. And so some of that occurred last year in the first phase of the governor's reformation for K through 12. So anyway, we appreciate that. And Gary's been on Rev and Tax for as long as I can remember. I think, and he became chairman of the Rev and Tax Committee in 2013. He's been a stalwart. He's been always really reliable and really smart, and always have what I used to call fingertips. He knew how to handle his committee, and it's particularly challenging these days. And so I think I'd like to start out with the Tax Reform Act, because as long as I was in the legislature, that never really became a controversial issue. Basically, it's something that you had to address at the beginning of every session, because people have to start filing taxes in March 1st. And this year, there was a glitch. So I guess, Gary, we could start out with you first and maybe start talking about that, because before we get too far, though, I'd just like to point out that as I read it, the Tax Reform Act is already a $46 million tax decrease. So anyways, go ahead and start.
Would at least like people to know that I am an Idaho native, born and raised. I grew up on a small farm out between Meridian and Kuna. I live in Nampa. I represent District 13. Been on, as Bruce said, I've been on revenue and taxation ever since I came into the House, which this will be my 16th session. I was vice chair of the committee for 6 years, and then this will be my 4th year as chairman. I also serve on the business committee and on the local government committee. But anyway, tax policy is not political. You believe that, you believe anything I have to say. So anyway, but the conformity bill that Bruce mentioned, there wasn't really any problems with conforming to the tax code, but it had to do with, of course, same-sex marriage, a provision that we had put in back in 2014. Ken has got more of the constitutional things about it. But anyway, there were some on my committee who objected to that, and then there were some others in the House. So anyway, we had to do a little compromising and a couple of things, and I think we worked out a good compromise. Some people may not think it is, but anyway, the bill is out of my committee. It's off the House floor, and it's over in Sidaway's committee now, and hopefully we can get it done so that the CPAs quit calling me on the phone wondering where it is. So anyway, that's as far as if Ken can maybe give you more background.
Go ahead, Ken.
On the constitutionality part of it and stuff. I can get into it, but he's got all these notes there. So.
Ken?
Just give you just a little bit of background through I think most of you are probably aware of the Ninth Circuit Court of Appeals cases and also the United States Supreme Court case that came down during 2015, last year, granting that ability for same-sex couples to basically file, because originally that bill was a U.S. Treasury ruling, and that was challenged. And so basically what happened was, as the tax commission, we're required to follow the law, so we said, what's the best way we can give instructions to the citizens of Idaho for clarity when they file their taxes? That would be to remove the subsection C language that had been placed in the statute approximately 2 years ago, which at that time stated that for filing purposes in Idaho, defining marriage as a relationship between a man and a woman. So with the recent court rulings, we felt compelled, and we did this with knowledge with the governor's office and whatnot, that language was stricken down by the Supreme Court, and so we needed to remove that from the statute. So we provided the legislature with a clean piece of legislation that basically removed that language. That's where the roadblock was hit that Chairman Collins is referring to. So in the end, what was added was that subsection C language was kept, but subsection D language was added. And subsection D language, basically, the first thing it says is notwithstanding subsection C. So it says, keep reading when you get through C. D says, for Idaho income tax purposes, we're going to follow what the Supreme Court says in the Ninth Circuit Court of Appeals for filing status in Idaho. So that's kind of what happened technically. But Gary is correct. The bill is needed for those of you that have more complex Idaho tax returns. We need to have this bill before you can file those. And we are hearing, and I know you are hearing from CPAs and tax preparers across the state.
I'm done with it now. It's just
So, Jeff, would you like to respond to where you are on the Senate side?
Well, I would, and when I come before a committee or a group, I always say this so that there will be no question. I know as I look around here that I'm the dumbest guy in the room, so please accept that. So what I say, you have to kind of keep that in mind. But, folks, for a lot of people, this looked like a no-brainer that the tax conformity bill should have just gone through. But when we came and took our oath as a legislature, we declared that we would uphold the Constitution of the United States of America, and we also declared that we would uphold the Constitution of the state of Idaho. After those court rulings, we found ourselves in conflict between the United States Constitution and the Constitution of the state of Idaho. Now, we've fought civil wars. We've had hundreds of thousands of people die over who has primacy on these kind of issues. So that put the legislators in a pretty tough situation. We can uphold our state constitution or our federal constitution. And quite frankly, a lot of us really resent being put in that situation, but nonetheless, we get the big money, so we make the decisions. So I don't know that this is, in this particular instance, if this is one of those issues that is worth fighting over, and if this change in the language is going to cause a fight somewhere down the road, or if this is going to be a final resolution and we'll be able to move forward. But I just want you to understand that this was not easy. It did, on the surface, it may have looked pretty easy to a lot of folks, but for a lot of people that had committed to our state constitution and thought that maybe that had primacy, this was really difficult.
Just to support that last comment is I don't know if you recall, but several years ago the legislature went through the process of throwing out a proposed constitutional amendment to ban gay marriage in the state of Idaho. And the people in the state of Idaho overwhelmingly voted to amend the Constitution to put that in the Constitution to ban gay marriage. So for legislators, one of the things you have to learn first off is to differ without being disagreeable. And so I think Jeff stated it well, is what the conflict right here is which has primacy, and that's beyond the issue as far as whether you believe gay marriage is all right or not. The issue is who has primacy, and that's always been a debate that's occurred in every state legislature. States' rights are always in the mix, and so who has primacy, but that being the case, we'll see if this ultimately prevails. But that debate is still ongoing, and so it's important that everybody respect the history and the process that people have gone through, whether you believe that's right or wrong. So just beyond that. So now the other side of that is you got everybody keeps talking about a tax decrease, but as I read the conformance bill, is that by 2017 there will be approximately $46 million decrease in revenues to the state, which I read as a tax decrease. So well, I'd like for you guys to respond to that. Go ahead. That's in your committee, I think, came Gary. So
the conformity bill starts in my committee. Bruce put it pretty clear. I mean, if we had not passed that, not only would it have been a tax increase of that amount of money, but it would have caused those who would have normally taken, especially the 179 deduction, to file two different tax forms too. So a lot of people, because of course our taxes are taken off the adjusted gross from the federal. So I look at it that way, and so that just adds that much more to the importance of the legislation that was passed.
Just a little bit of a breakdown of those numbers. There's two components to that fiscal note. One of them falls within the current fiscal year. This gets a little complicated. I'm not going to go into great detail, but tax years versus fiscal year are two different time frames for the state of Idaho. And so when the United States Congress acts, ironically, on December 18th and signs into law to make tax cuts permanent that they had previously had one-year extenders on, has an effect in the current fiscal year, so for filings for 2015. And so part of that revenue would be fall into the fiscal year this year, and that's a one-time nature effect. Because that budget's already been set. It was in a box with a pretty low bow on it. We had to take the lid off for a moment, pull out $17.2 million, put the lid back on, tie the bow, and that's the current fiscal year. the ongoing provisions that the United States Congress did, and we're thankful for, because now there's some certainty about what the tax relief is for people nationwide. Some of those provisions are made permanent. There are a few of them that are only on a 2-year extension, and they'll be readdressed, but they're minor compared to the other one. The 179 depreciation nationwide has about a $22 billion effect. That's the 179 depreciation only. What Idaho's portion of that is, we think it's about 0.1% of that, so about $22 million. So it's the lion's share of that $28 million is 179 depreciation. 179 depreciation is when a business buys equipment, they put it into service, in their tax planning, they elect to write that off 100% up to a cap of up to $500,000. The other language would have, if it had not been extended, would have reset that amount to $25,000, which Chairman Collins said accurately, that would have been a substantial increase for small businesses in Idaho. So there's a significant amount of passing along of tax breaks from the federal government that you do on your federal form. We're passing that along by conforming to the Idaho citizens when it comes to Idaho income tax.
Senator, do you want to respond? Excuse me, should be more formal.
Well, that's fine, Bruce.
That's fine. You call
I shouldn't call him Bruce, I should call him Juice. So, to me, not to conform, there are several sides to it, I guess, but whether you're going to depreciate, if you purchase a piece of equipment, say for $500,000, and whether you depreciate that piece over 1 to 3 years, or 3 to 5 years, or 1 to 7 years, or up to 20 years, ultimately you're going to get that back. But this piece of legislation done at the federal level allows us to take that off up to $500,000 in 1 year. So if you buy a new big tractor for your outfit, you can depreciate that out in 1 year. I think there's a bit of a stimulus in that, and I don't know if it's a mental set that maybe a construction person or a ranch or a farmer, when he starts to look at his schedule, you say, well, I've got to keep this tractor for a couple more years or whatever in order to get full depreciation, when you really don't. You could trade that in, you'd forego that, but then you'd pick up a new outfit. But I think that this kind of incentivizes folks that utilize those big pieces of equipment or whatever to get her done, get her going, do what you have to do, get that appreciation, and you're going. And so I think the argument could almost be made that you're going to get this tax break regardless of how it's taken. But if it's taken that first year, then it does make a difference, and I think it incentivizes people to keep their outfit up and in good condition.
So at this point, I'm going to stop and see if there's any questions.
The question was on the first topic, and the question of a legal union versus cohabitation versus a common law marriage. Do you cover that in the language of the bill?
I would just, first of all, common law was struck in Idaho. It no longer works in Idaho. But I'll let Ken, he's the resident expert on that. Not personally.
Let me clarify. I did grow up in Donnelly on a farm and still operate that today. The language of the bill, I'll just read it for you, because I think that clarifies. I'm not copping out on not answering your question, and I don't know if I'm qualified to answer your question, but let me read the law that is proposed in this bill. It says, notwithstanding subsection C of the section, the marriage is recognized and permitted by the United States Supreme Court, and the Ninth Circuit Court of Appeals shall also be recognized for purposes of the Idaho Income Tax Act. This language is embedded in Idaho Code in Title 63, which is the tax codes of the state. There are other provisions in Idaho Code where definitions of marriage play out. We're not addressing those in this legislation. This is only the annual conformity bill so that people can file their taxes. Probably to answer your question, I would require somebody more qualified than myself to answer that.
So if the bill is not passed due to some of these concerns, what happens?
Basically what I said earlier, that tax break would be lost. Our farmers and those who normally would take that deduction would have to file two separate forms. I guess it's even more than
It's
that.
actually a little more drastic than that, because Idaho Code right now is a volume of books about 4 feet long, and in there you will not find a basis for Idaho income tax. We start Idaho income tax law at line 28 of your federal form. So getting to line 28, Idaho does not have any law for that. And so that's the real reason for conformity, is we have to have that starting point for Idaho. That's what you enter on line 7 of the Idaho form. That's where we start. So without conformity, there is no basis for income tax starting point in Idaho.
I'm not sure you should let people know that. Ellen?
It's on the tax form.
Yeah, I know.
Back to the depreciation issue. I don't think I need a mic. For the depreciation issue, you noted that the fiscal year is different than the calendar year, so I'm aware of that, if you could expound on that. But is that depreciation granted over the course of 1 year for $500,000? Would that be applicable for 15 and 16, or what at this point would that follow?
Okay, the 179 depreciation provision passed by Congress affects tax year 2015, which just closed on December 31st of this last month. So those provisions were granted for that tax year, and the years following they're made permanent. So when people they're preparing their taxes now, they'll make payment on those taxes generally due on April 15th. However, under some business provisions and whatnot, there's also another deadline of October 15th. So the revenue that comes in from those taxpayers comes in 2 segments, and virtually all year long, because we have people filing at different times through the year. And so the bulk of that happens for most tax filers on April 15th. There are a number of business returns and whatnot that are due on October 15th. So that's why the splitting of the number, but it applies to both 2015 and following for 179 depreciation in conformity to the IRS.
Okay, just looking forward as a business with expenditures for CapEx to be made. The depreciation schedule is critical, obviously.
Okay, so we'll move on to the next subject. So, go ahead.
I just want to add one thing. There have been especially the last few years, talk of why we don't pass legislation to automatically conform to this conformity bill each year. And we have put some time and effort into that. Basically, I guess it kind of comes down to it would be unconstitutional. That's what we've been told by the AG's office and stuff. Plus, it's just one of the things I think we, as an Idaho legislature, have the opportunity to look at those things individually each year too, which doesn't happen in a lot of things in other states. So we look at it as a plus. So although this year I would have been happy to have done something else with it, but anyway.
Would you like to respond,
Yeah.
Senator?
Yes, I'm sorry.
No, okay. So the next, so one of the things that gets debated a lot is should there be a tax reduction bill? And so things, that's one of the reasons I mentioned the conformity bill actually is a tax reduction in a roundabout way. So, but there is a bill that's been set forth that was introduced by Representative Moyle, and Cox's Army are co-sponsors, right? So, and including the Speaker of the House, Scott Bedke. So, and the way that bill reads is it's 1/10 of 1% reduction in personal income tax, 1/10 of 1% reduction in corporate income tax, and I think as I read it, a $10 per exemption grocery tax, well, up to $110, is that right? Yeah. Per family. So
Per person, per family.
Per person, per family. Okay. So anyway, one of the measures that you read in polls up to now is that there doesn't seem to be a public outcry for a tax reduction that I'm hearing, because I'm using, and Senator Sidway, you'd know better than me, and Gary too, there was that interim kind of quasi-committee put together, and there were 4 ideas that were put together, and none of which made it out of committee. So could you kind of expand on that and in the context of House Bill 380, which is the proposal by Representative Moore?
I guess one of the first things I would say, which is pretty evident to both of us that are sat here on this committee, especially with tax policy, I guess I'll just throw this out, the House is more conservative than the Senate. I mean, it's that's just the facts of life right now politically, and there are those on the House side, myself included, that think we have we've given a lot, especially to education the last few years, and grown a lot of the other agencies and stuff. But one of the things we haven't paid any attention to is the taxpayer, and that, I guess that kind of sums up where we're at from the House side of things. This particular bill that Bruce was talking about is just a little small step as far as I'm concerned. And the whole basis, I wouldn't say that it's just because of our political philosophy, but that has a lot to do with it, budget or taxation policy. But a lot of the House members feel that we need to make some small steps in trying to make our state more competitive, especially in the income tax for corporate and individual. And this particular piece of legislation is just a small step that way. So that's where we're coming from as far as I'm concerned. And of course, we were talking about a lot of the other things too, and nobody mentioned this, but this is an election year too. So, we don't like to think things are, I made the statement earlier about politics, but, that has something to do with it too. So, but from a basic fundamental philosophy, I agree with, my name is one of the sponsors on that bill. So there are those that feel different than we do, and some of them sit on the other side of the rotunda, and some of them sit right beside me too. So, but we still have good communication. So we put the bill out. It has not passed the full House yet, but we have put it out of the House Revenue and Taxation Committee. So,
Senator.
Thank you. So we did have a super secret tax meeting this summer. We loaded up the cars. I think there were 6 of us that went down to Utah, and this was at the call of the pro tem and the speaker, and they wanted to go down and look at Utah's flat tax rate. They had a rate that was somewhat similar to ours, and then it took them about, was it 7 or 11? 7 years to come up with an idea on how to lower that higher tax. And so they worked and worked and worked on it. They did pro formas for every individual person in the state, and they'd take it out, and that guy would say, I have a wife and 2 kids, 1 on the way, and I earn $47,000, where am I? And they had the data to point at this dot on this matrix and say, you're right here, you're paying this much right now, under this provision, you're going to end up with a lower income tax rate. And the way they did that is they broadened the base. So a lot of the things that, they started taxing railroad retirement and Social Security and everything else. They got rid of a whole bunch of exemptions, and that way they did that. And I don't know what the ultimate outcome of this committee is going to be. I don't know if we're going to get put back into an interim committee with the same or different members of that committee and go forward and look at ways to reduce our taxes, because Idaho is surrounded by states. Some of them don't have any income tax, some of them don't have any sales tax, some of them have a lot of resources and we have a lot of resources. We just are not able to utilize our resources in this state. A few too many lawsuits, and they've got a lot of our industry shut down. But and maybe I shouldn't say that, but I do say that. So anyway, we find our states surrounding us look more attractive to businesses coming in. And sometimes we do some things that, and I have an excuse because I know I'm not very smart, but sometimes we as a state do some things that aren't very smart. If we want to expand our industry, if we want to expand our base here, if I say this, the ceiling might fall down, but if we're going to do that, why aren't we expanding Medicaid? We've got gazillions of tons of money that would come into the state and provide a lot of employment, but for some reason we picked that one that we don't want to tackle. And if we're going to be pure on that, why aren't we pure on our highway taxes or our EPA money that comes through DEQ and Department of Ag? And you could go down the whole list, but anyway, we have chosen not to do that. But we've also been given direction to go out and try to find ways to bring businesses into the state. And we think one element, I was going to say one of the very important, but one element of that is to try to reduce individual and corporate income taxes. That's one way. So this committee came up with, we talked about a lot of things, everything from trying to look at the internet sales tax, and that's really, we could get maybe $2 or $3 million out of doing that here as a state if we join the group. And but until Congress acts where we could really tap into a revenue, we probably don't have a lot of opportunity to get that. We talked a little bit about that. We talked about getting rid of some exemptions, and Ken and I both, and Gary too, maybe sat on the committee back in 2007 where we looked at all of our exemptions, and I think out of the 116 we had then, we reviewed 4 of them, and out of those 4 we got rid of 1 exemption. It's hard to do. So unless we sunset all of those exemptions and just broaden up with 1 vote or something like that, it'll be tough. Another one was personal property tax. That's been a favorite of mine. I just despise that tax. To me, it's so unfair. I could buy this table, put in my home, I'd be taxed on it for 20 years. If I buy this table, or put in my home, I wouldn't be taxed on it. If I buy the same table, put in my office, I would be taxed. So we did the $100,000 exemption. We're looking at doing maybe $150,000, $200,000, $250,000 exemption to help some of our businesses. And I've talked way too long, and there are a whole bunch of other things that are super secret tax needs looked at. And then we went online, and you can see all the notes and every discussion that we ever had. So, sorry about that long answer.
Oh, that's good. People need to know what you go through. Ken, you want to talk about that?
Senator Sidaway brought up the issue of internet sales tax or streamlined sales tax project or the Marketplace Fairness Act. All of those have some similarities to them. Just for a quick background, the Streamlined Sales Tax Project is a consortium of currently about 25 states that have joined together, and they use common definitions about what items are. They use what they call certified service providers, which will apply through very sophisticated computer software what the tax rate is and every zip code in the country. And many companies use that, especially if they're selling across state lines. It all goes back to probably two national or Supreme Court decisions, one of which is more widely known than the other, the Quill decision in 1992, and another one back in 1967 called National Fellas Hess. If anybody believes that the economy today in 2016 was anticipated in 1992 with internet sales, they should be well retired by now. Because I don't think any of us ever imagined what was going to happen when it comes to internet sales and the electronic financial transactions. There are multiple states, including Idaho. We've seen some draft legislation that may look at expanding the nexus. And nexus means where a transaction happens, and there's potentially some legislation coming up that will address that. That's something to pay attention to because that has a direct hit on the Quill decision in 1992. When it's fully built out in 2009, we estimated the impact at about $46 million in 2009 to the state of Idaho. We think that number today might be closer to 60 million of revenues that are not being paid by Idaho taxpayers who are buying goods that would normally have paid tax when they went to the brick and mortar stores down the street. So there's a lot of, and this gets into the argument of the unfair or the non-level playing field between those brick and mortar stores and an online store. And I think eventually the United States Congress will act on it. It's just a matter of time. There is current legislation introduced again this year. It does have to go through the House Judiciary Committee because it is an interpretation of the United States Constitution. So that's a little background on that. I will say that the interim committee, the tax working group, the super secret committee when they started out, asked some very good questions about data and what's happening in the economy. The economy looks way different today than it did in 1965. And does Idaho's tax policy still reflect that nature of a makeup of businesses? And I can show you graphs and whatnot that show how the service industry of the state has rapidly taken over the driving factor of our economy. But I applaud them for the efforts that both you chairmen have put together in the working group, because I think it's a good starting point, and we are, from the Tax Commission's perspective, we're there to help provide as much data and information as possible. I know Senator Sidaway talked about that every dot. We did that for Idaho based on 2013 returns and gave them that information.
So thank you very much. First of all, I want to say I know these guys individually, and they are top-notch people, and I just think we're fortunate that they take the time to volunteer, because the good thing in Idaho is we're a citizens legislature, so we have to go home and live with what we did to ourselves. So it's a good way for checks and balances, and we have to hear from our angry constituents sometimes, and once in a while we get a pat on the back. So I used to, I don't anymore. But anyway, I just want to thank them for their service and they're willing to come and be here today.
Question for Ken. Do you know what percentage of the tax filers would be affected by this 0.1% reduction in taxes in the state tax?
The 0.1% would affect, in the 7.1 rate, there are 54,298 taxpayers. That's in 2013 data. That's the next correct. No, this is individuals. And then the 7.4 rate, there are 305,980 filers at that bracket. So combined, about 360,000 taxpayers of the roughly 800,000 that we have today. There are approximately 214,000 filers that pay zero tax. They don't have any taxable income. In other words, their income is used up by deductions, and they
try to get this question put succinctly. The biggest tax that we pay is on a residential property. And it's my understanding, talking to the assessor's office and others, that it's really legislative statute that determines the budget process, the 3% increase, the assessed market value, etc. So if a person were interested in changing that, reforming that, where would you suggest they begin with the legislature?
All taxes start in the house.
So let me point out, so by Constitution, all tax initiatives have to start in the House of Representatives. But they don't necessarily have to go through rev and tax, because I had that debate. But anyway, generally speaking, they do. So we'll start with Gary.
That topic has been brought up a number of times. In fact, I have a couple of proposals, just broad proposals right now to look at some of those same things. You're talking about the 3% to drop it to 2% and some of those. But let's see, how do I put this? The cities and counties have a strong lobbying group too. So especially this year, I don't think I would be willing to jump in the middle of that hornet's nest right now. But I appreciate your comments, because I think there are some things there that need to be looked at, especially the foregone balances and such. So, but not this year.
So just one more caveat to what I said about all tax initiatives start in the House. But the Senate can't amend them.
Yeah.
Get too strong approach.
Yeah, it is, yeah.
This is a tough deal, and I don't know over here in this part of the state if you've seen some of the newspaper articles like we've seen in eastern Idaho, where they've talked about the clawback provisions that the counties have if they don't utilize that 3% for 2 or 3 or 4 or 5 years, and then they can reach out, and all of a sudden you've got a 20% increase in your property taxes over here. I don't know if we tried to do something to restrict that, but I'm afraid the result of that would be that every single year you would have that 3% increase in the budget there. So, what is the county doing that you would have them not do, and what are they not doing that you would have them do, I guess? If you're going to cut your property taxes, and it's a hated tax, no doubt. You have to get the checkbook out, you have to write out the check, and everybody sees exactly what it is. And a lot of times we don't see the services that are being provided. But the counties, with the indigency funds, with the roads and the sewers and the waters and everything that goes into that, and sometimes there's an overlap with the cities, the counties are always bleeding poverty. They never have enough money for their roads. They can never get the sewers up to par. They're, everything, it seems like, they're just like any government. There never is enough money. So if you're really serious about that, I would probably start with the Idaho Association of Counties and go there with the alternatives, what they do need to do and what they don't need to do, and further define those and what kind of a reduction you're looking at. And if you can't convince those guys, you probably can't convince us guys.
Just to follow up on that one, what Jeff Wells mentioned as the clawback is what's legal terms is foregone balance. And so that's what gives them the authority. Further questions? Yes.
If not mistaken, it was Mr. Sidaway who said that we need a lower tax rate to get more businesses here and everything else. And I moved my business here at age 60 years old about 10 years ago. And one of the reasons I moved here was not because of the tax rate at all, but because of the out of doors. But once here, my biggest fear is we're not educating our kids. We're not paying enough. We have the lowest performance, one of the lowest of any state in the U.S. And we don't want to raise the taxes for kids to educate them. That's what's going to bring business here.
Can explain where I kind of came to my come to Jesus meeting, I guess, with that issue was I was with the Idaho Association of Industry, the IACI group, and they always had two policies: was lower taxes and educate the kids, and I started hearing a lot more from those businesses and they said that we don't have a qualified workforce, and they look out in the future, and it's not, a few hundred workers that aren't going to be qualified. It's literally thousands and thousands of potential employees that aren't going to be here for the businesses, and so that was the question that we put to IACI. Is, quit giving us mixed signals. You want our kids educated, or do you want lower taxes? Because you can't have them both. And so, the one that I heard was we want an educated workforce, and that kind of gave me the impetus to do what I did last year. I can't tell my fellow legislators how to spend the money, and the way this system's set up, it's easy to stop stuff, especially if you get to be a chairman. If you can stand the heat, you can stop it. So I haven't changed that attitude, but we had a good year, and if there's some opportunity to do something, as far as taxes are concerned, if we can afford to do that, then I'll consider it. But, we made a big commitment on education this year. Next year, it's bigger. It's bigger. We can't cut ourselves short on that either.
Senator Sidaway, my recollection was a year ago that I read that you would not support a tax decrease until starting teacher salaries were $40,000. Was that correct? And are you going to stick with that? Thank you.
I think that's what I just said.
Yes, I thought I heard you say that.
I think if you look in the career ladder that's proposed, it's a real strong move. It was a strong movement last year, and that's sustained in this year's governor's. So that is moving in that direction.
When you mentioned indigent care costs, is that mostly medical for the counties? And would Medicare expansion, would that alleviate some of that cost for the counties?
Well, it certainly did, and this year, because of that, I think we had a $29 million return to the CAT fund because some of the bunch of people had gotten I shouldn't say gotten, it's gotten even worse. Some of the people purchased their insurance, and that became a requirement, and you know how that's enforced is through our federal tax policy, and so that reduced that, and I think that if we could cover that gap, I think that that requirement for the counties to even to come up with that money for the medical portion. Indigency fund isn't all for medical. Some of that is for housing and feeding the poor and stuff like that, providing other services. But a lot of it is the medical.
The result of that was not, there was some expansion with Medicaid, but most of it was because of the ACA, Your Health Idaho, the exchange, people buying, and most of the people that bought on the exchange are being subsidized, and that's the reason they were able to get insurance. So, and that's part of the discussion that I know we've talked about expanding Medicaid, and we have the proposal the governor's put out this year too, but there are states that have expanded through the private market, through the insurance, to cover those Medicaid people instead of being Medicaid. And when they, I don't know, any of you, just take 1 minute, but in my real life I'm an insurance agent, have been for 40 years, but so for my own benefit, I got certified to sell on the exchange so I could tell what was going on with it. But when they apply on Your Health Idaho and their application goes in, it goes through Health and Welfare first. And it's checked, and if they qualify for Medicaid, they're told at that particular time. If they don't qualify for Medicaid, or they qualify for a subsidy to buy insurance, then of course that's what they're told too. So that has expanded some of the Medicaid in the state through that type of thing. So
when the bill was originally proposed, there was a problem that came up during testimony with it, seeing as the actual rate deduction was on the top 2 brackets rather than the bottom 4 or 5 brackets. There is a way that other states have done in order to correct this error with an earned income tax credit on the state level in order to cover those families that are not eligible for the drop on the top, but also are on welfare or food stamps, so they aren't eligible for a food exemption program or any of that. Is anything like that on the table?
Part of the piece of legislation, the $10 increase in the grocery tax is, in a sense, kind of to compensate in that bracket. No, the using an earned income credit we hadn't talked about, so you might bring that to me. She's my intern for my committee, so bring me that information. I'll take a look at it.
Okay, well, I'd like to thank these guys once again for taking the time.
Politics for Lunch is presented by the Andrus Center for Public Policy, a nonprofit organization within Boise State University's School of Public Service. Our mission is to explore and promote public lands and the environment, education, and leadership. You can learn more at andruscenter.boisestate.edu.